Hello, everyone, and welcome to our webcast. Every year, Sage Intacct conducts a Close the Books survey. Today, we're going to share the findings of the survey along with actionable best practices and strategies to help you accelerate your close and deliver value across your organization. Whether you're new to the close or have been involved in closing the books for years, we know that you're really going to find this webcast helpful. The content that we are sharing today is relevant across all industries for small to medium-sized companies around the globe. My name is Susan Perlston. I'm a Senior Product Marketing Manager for Sage Intacct. I received my CPA designation almost 25 years ago and have had many roles in accounting, planning, and audit, so I know what it's like to be involved in closing the books. But more recently, I've worked in consulting, sales, or marketing for accounting, ERP, and budgeting and planning software companies. I'm very excited to have Raleigh Garcia join me today. Raleigh has over 25 years of experience in finance, sales, and marketing, and is the VP of Marketing for Sage. Before joining Sage, Raleigh served as a CFO and Chief Administrative Officer at several major nonprofits and leading for-profit organizations. Now, a few housekeeping items before we dive into our formal presentation. You will have the opportunity to submit questions throughout today's webcast by typing your questions into the Q&A panel. We'll try to get to all the questions by the end of the webcast. If we do not get to your question, we'll make sure to follow up afterwards. This session will also be recorded and distributed to everyone via email by the end of the day. And finally, please take a few minutes to fill out the survey at the end of the event. We would love to hear your feedback so we can deliver better webcasts that helps to drive success for finance teams. Well, we will be highlighting some of the survey findings throughout the webcast. The focus today is to translate these findings into meaningful insights and strategies to help you achieve a faster, more accurate close so that you and your finance team can get more time to analyze information, provide guidance and insight to unlock value across your organization. After compiling and reviewing all the survey results, it became evident that there are really three key strategies to achieve a faster and more accurate close. First, to help save time and reduce your month-end stress, automate your key accounting processes as much as possible. Second, to help increase the speed and accuracy of your close, leverage AI functionality that's purpose-built and embedded in your accounting software. And finally, third, invest in a faster close. If you think of a month-end close as being a series of processes, then just like any other process that is inefficient and is negatively impacting your business, to achieve a faster, more efficient and accurate close, you need to invest to achieve a better outcome. Just a little information about our survey methodology. The survey was an online survey. It took about 7 minutes to complete, and it was conducted in February 22. It was sent out to a diverse group of finance leaders and their teams. So let's jump right in. According to the survey, 93% responded that they are under pressure to close their books faster. At first, I was surprised with these results, given today's availability of cloud accounting solutions that offer time-saving features such as built-in automation, AI, and integrations to external systems. But on the other hand, because the role of the finance function has shifted from just being the holders of historical data to being more forward-thinking analysts and advisors, it makes sense that there is more pressure now to close the books faster than ever. Especially when you are operating in a business environment that is somewhat unstable. A company needs to be able to pivot and make proactive decisions and perhaps go in different directions. This often entails constantly having to reforecast, rethink, analyze, and act on new data. So the faster you can conduct close activities, the more time there is for finance to analyze the data and add value. Raleigh, in your past roles as a CFO, have you seen a shift in the role of the finance function? And if so, what has been your experience with it?
Thanks, Susan. That's a really great question. And the answer is absolutely. The pressure on finance has really increased as the ability to deliver a close faster has increased. We all, as financial support staff want to make sure that we are delivering a ton of value to the business. And when the close takes 30 to 45 days and you spend your time reconciling and moving things in and out of Excel spreadsheets, you have to focus on just getting the numbers right. But when you can get away from that, because the technology allows you to do that automatically through automation, it really frees you up to think more strategically about the business. And we all want to add more strategic value to the business. I think that's the goal of all finance departments everywhere.
Thank you, Raleigh. That's a great response. I really appreciate it, and I totally agree with you. Now, let's take a quick look at some of the details about the survey respondents. The respondents represented over 60-plus industries, with the highest representation coming from not-for-profit, technology and software, healthcare, finance, insurance, and finally real estate and construction. There were over 1,400 respondents that came from small to large companies and represented many finance and accounting levels and roles across the organization. Roughly about one-third of the respondents came from companies with revenues between 25 to 249 million, and almost 50% of the respondents had titles of accounting or finance director and above. So let's now dive into the first strategy, which is to leverage automation to help save time at month-end, and which we all know will help to reduce month-end stress. I know from working in various accounting roles, the month-end can be a very stressful environment. There's a rush to get all the information from different systems, perform various types of reconciliations, get input from many different stakeholders, and likely the need for various levels of manual data entry. But it really doesn't have to be that way. There are many built-in automation capabilities that's available with most cloud-based accounting software that can help you save time and reduce stress at month end. In fact, more than 60% of respondents absolutely or strongly agree that these all save time at month end, with the highest time savers being templates for journal entries, pre-built dashboards and reports, and having an automated close checklist that keeps track of close activities. And not far behind is the ability to have seamless data integration between your core financials and other systems, such as payroll. And more than 50% absolutely or strongly agree that they perform these automated accounting processes throughout the month to reduce month-end pressures. This is known as continuous accounting or a continuous close. This means rather than executing close procedures all at the end of the month, you run month-end processes throughout the month. This not only eases the stress at month-end, but it also gives you an accurate picture of your financial numbers at any given time. However, the use of automation of accounting processes to assist with the close varies by company size, and in most cases, the larger the company, the more automation that takes place. In particular, companies with revenues of greater than or equal to 250 million automate 40% more than those companies within a lower revenue bracket. As shown in the past slide, the level of automation tends to increase as a company grows in size. So how does the level of automation impact the number of days it takes to close? As you can see in this graph, as a company grows in revenue, days to close increase up until a company size reaches about 250 million in revenue, at which at that point, the number of days to close begins to fall. The reason being, as mentioned in the last slide, these larger companies automate up to 40% more than smaller organizations. And even with the potential need to handle more complex accounting issues like intercompany transactions and foreign currency translations that are normally associated with adding more legal entities and with larger organizations, these companies with revenues of 250 million or more are still able to close the books faster by 15%. This indicates that greater efficiencies happen and are needed as a company grows. And when you automate more accounting processes, you get a faster close. Raleigh, can you share your insight or experiences related to automation and how it has helped to save time and speed up the close?
Absolutely, Susan. this is one of the things that I think is such a no-brainer, is when you can install the automation in your system around AP. So anybody that's worked in a finance department has had that experience of the end of the week or the end of the month, the stack of papers that need to be signed. And somebody has to pick those papers up and walk around the office, maybe even a different floor, or potentially even a different building, to get signatures from the different people who own those invoices. And that's just a time-consuming experience. In fact, one time, I had a CMO storm into my office, slam the papers down on the desk, and say, "There is no way I'm signing these papers." I was like, man, this is just the process we have to go through. It's for our auditors. It creates a lot of stress. When you can automate that, not only do you take hours and days of walking around searching for people off the table, you can reallocate that time into just being better at your job and adding strategic value to the organization. Not only that, but automating AP can save you money. They say that normal invoices cost roughly $15 a piece, and when you can automate that, it goes down to $3 a piece. That's a huge saving for the organization. So all the way around, automation can help speed your processes and help let your staff focus on the things that they really want to do, which is add value to the company.
Thanks, Raleigh. What do you think about the findings that it's showing that larger companies are leveraging this automation as opposed to small to medium-sized companies?
Well, I think they need to. So as a company scales, you can either scale by utilizing better technologies to do things more efficiently, or you can hire more people to do the mundane menial tasks that need to get done. And so this is not the exclusive purview of large companies. Small companies can leverage this too if they have the right software. But if you think about being able to use technology to do those tasks, you take error out of the system, so no use fat fingers. You don't have to worry about getting the wrong number in a cell. You don't have to worry about making sure your spreadsheets are tied together the right way every week or every month. So as companies grow, the use of technology helps them de-risk the organization from a financial standpoint and increase the efficiency and effectiveness of the finance function through automation and technology.
I agree, and I've seen it many times with smaller organizations. When they leverage automation, it really helps them to, really helps level the playing field for these smaller and growing organizations. To follow along the line of thinking from the last few slides, it stands to reason that if you automate more, your finance team will be freed up from manual efforts, and only then will they get more time to perform analysis. So it makes sense that larger companies that have participated in the survey were able to get 22% more time to analyze data, provide insights, and deliver value across the organization. Still, across all organizations, finance teams, on average, are spending 2/3 of their time creating manual journal entries and manipulating spreadsheets. As discussed in the past few slides, this is linked to how much an organization automates their accounting processes. But the good news, there are companies that are making strides to free up more time for analysis. I've had many conversations with Sage Intacct customers that are getting more time to perform analysis and are achieving unbelievable efficiencies by leveraging the ability to automate key accounting processes with Sage Intacct. And here's a quote from a CFO of a recent Sage Intacct customer. By leveraging Sage Intacct's automated workflows, this customer was able to increase their productivity by 60% and shift 25% of their energy from bookkeeping and data entry to more strategic projects like supporting their business with analytics or adopting new accounting best practices. So let's now spend some time to talk about AI and how it can increase both the speed and efficiency of your close. Okay, so now I'm going to talk a little bit about AI that can be used in accounting and the opportunity to provide productivity gains. So basically, the respondents were asked if they use AI in some capacity to help with the close, and specifically, did they use a tool which we call an AI outlier detector to monitor transactions to find anomalies or errors? And well, I could say about 80% responded that they did use it in some shape or form. 55% of respondents absolutely or strongly agree that it really, really helped them to save time at the month end. And then there was another question around, are you using AI in your business and to help you with accounting and close? And it was interesting that overall, across all companies, only about 10% said they were using AI, but for larger companies, 21% said that they were using AI to help them with the close. And this number is increasing because I did look at the numbers from last year, and I'm going to share a slide later on that more and more companies and CFOs and finance teams are using AI to help them with their finance. So Raleigh, perhaps you could share your vision to the potential value and or productivity gains that you can expect from AI and how you think it will impact month-end processes going forward.
Sure. So for example, Sage Intacct has something called GL outlier detection. This is a great AI tool that learns your business over time, and actually the software and AI automation piece will watch your transactions to see which ones fall outside of the norm for your organization. And then it'll serve those transactions to somebody and say, hey, you might want to take a look at these transactions because there's potentially risk involved. So you can imagine if I'm working in the finance department, I usually make a $3,000 transaction and it lands in my group. That's not going to be flagged. But if all of a sudden I end up making a $30,000 transaction in the automotive department, that's something that's going to get picked up, and someone's going to have to review that. So today, if you don't have something like this, a good automating technology, someone's got to check all those transactions. And if you have a huge number of transactions, you have to do it by sampling. But the software can do it for you automatically and bring up those questions that potentially have risk to the organization. It frees you up to do other things. And again, start to think about how you can strategically add value in your organization. So that's a really, really easy way to save time. So as we develop the AI tools further for your organizations, what you'll find is that those menial tasks of reconciliation are things that we let the software do for us, and allows us to actually put human thought into the strategy of different departments within your organization.
Yeah, I totally agree. And just looking back over the years when I was in accounting, all the tedious, detailed work that we had to do to check for accuracy, it was just crazy. And I mean, I'm going back easily 10, 15 years. And if I only had a tool like an AI outlier detector, especially when I was in budgeting and planning, my team, we could have had a lot more time to do some analysis. So this is very exciting to be able to use in accounting, and I think it's just something that finance teams are going to really latch on to and use to help optimize everything in the company and improve accuracy. So thanks, Raleigh. The reason why AI is so powerful when it comes to using it to help with accounting processes is because it brings so many benefits to the finance team and to the organization as a whole. It helps to improve efficiency and optimize processes because AI can review thousands of transactions in minutes to find errors or anomalies. It can flag transactions or data that doesn't fit past patterns, or perhaps GL entries that exceed certain threshold amounts, or incorrect G accounts that are used. This would normally take hours or even days for a multitude of accounting staff to review. And in a recent AI adoption survey compiled by Sage, which was highlighted in the previous slide, the most common use for AI in accounting was data entry. So AI not only eliminates repetitive, time-consuming work, it also replaces and automates inefficient manual processes that normally require human judgment. And as a company grows, perhaps producing a higher volume transactions or different types of transactions, AI can continue to keep up and scan large volumes of transactions without the need to hire additional headcount. So what does this all mean for the finance team? It essentially elevates the work and output value of finance by freeing up more time to focus on higher value activities, such as analyzing data to drive insightful decisions. AI can also help to reduce boredom and fatigue by not having to do as much manual and repetitive work. And yes, AI can ultimately improve the quality of life for accounting and finance teams. I don't know how many you've worked overtime hours that you've had to do at the month end to identify and fix errors and improve journal entries. Well, AI would help reduce that time, and you would get more time with your family and friends. And because AI provides more opportunity for the finance team to work on more interesting and strategic projects, this helps with employee satisfaction and retention, as well with attracting more talent. And the last benefit, AI ensures your GL is more accurate and in real time. Why? Because AI works 24/7. It continuously scans your data to detect and highlight potential errors. And AI can alert the accounting team to fix these errors as it happens. This enables trust in your data sooner. This means you don't have to wait until month end to make the adjustments and test for accuracy. And the last point about supporting intelligent spend and revenue accountability. If AI can catch errors before they get posted, imagine the amount of savings that it can identify by finding unimproved or incorrect expenses. Or as well, it can reduce audit risk by ensuring revenue is properly accounted for according to revenue recognition accounting rules. So here's a quote from a Sage Intacct customer who uses Sage Intacct's GL outlier detector. And basically, the outlier detector uncovered an overstatement of revenue of about $350,000 before it was in the books. Pretty amazing. And I would like to finish off this section on AI and accounting by sharing this quote from Aaron Harris, who is our Chief Technology Officer for Sage. I'm passionate about elevating the work of humans. By this, I mean letting the machines take the admin burden, spot anomalies, and automate repetitive tasks, freeing up humans to focus on what they do best. Okay, now we're going to talk a little bit about investing in a faster close. So what does that really mean? So the close is really a series of processes, just like any other process that could be inefficient. You need to perhaps improve it or streamline it. And to do that, you need to invest to make some improvements so that you achieve a better result. And that investment could either be in new technology, additional staff, or an investment in time to change or improve an existing process. So it stands to reason to achieve a more efficient and a faster close, you need to invest in a combination of these resources. Raleigh, given that you've led many closes in your career, maybe you can share an example of an investment that you made in technology and then how it impacted your close.
Absolutely. At one organization in which I was giving leadership, we had a budget department, and we did 4 forecasts a year at that time. And we had a single FTE whose sole job it was to receive the budgets around the organization through Excel and then load those budgets into our budgeting software by hand. And it was a long, excruciating experience that took 2 weeks to do. So we invested in a connector, just a small investment in the connector, that would automatically upload those spreadsheets into the budget software and literally saved 2 weeks of time. It went from 2 weeks to about 4 hours in a day. So that was an additional, basically 10 days we had that we could perform budget analysis within the organization. So if you think about being able to apply that level of efficiency in the rest of your organization, it unleashes a huge amount of potential for brain power. So thinking very strategically about how to allocate your financial capital towards those types of investments can really help unleash some financial strategy within your organization.
Well, when I was listening to you, I was actually like laughing because I had a very similar story when I was the head of budgeting planning for a very large telecommunications company, and I had 2 full-time staff, and all they did were all day long, and they were graduates with MBAs, and they were sitting there and doing data entry and entering the budgets, the forecasts, and the plans into a system. And I just thought, this is crazy. So long story short, back then you couldn't do a lot of things with your software, and it was a big software that we used, a large enterprise software. So we had to do some programming, and it took 6 months to program so that the budgets can be automatically integrated into the GL. And then I had 2 full-time staff that were used to do analysis. And one of the first things we did was to look at the large capital acquisitions and making sure that they were efficient. So it's like an exact story that I have. So that's pretty amazing if you can spend some time and do some investments to look at ways of how you can achieve a faster close. Okay, so now I'm just going to talk a little bit about investments that our respondents said they did in the past year to help with a close. So 55%, they said they added more headcount to help with the close, and this is very interesting. Compared to last year, only 9% said they added more headcount to help with the close, and 40% said they implemented new technology to help with the close, which was almost doubled compared to last year, because last year it was 21%. And then this question wasn't asked last year, but this year 29% of the companies said that they sort of automated some of their processes to help with the close. And then overall, across all companies, 7% said they used AI. And then I mentioned this in the past, the larger organizations were using AI more to help with the close. So Raleigh, perhaps you could share something about why do you think there was an increase in investment in this past year compared to the prior year when it's related to the close? And do you think there's an upward trend, this upward trend is going to continue?
Susan, I think that COVID had a lot to do with this. If you think about what it was like for the last 2 years, having to be able to potentially work remotely put a lot of pressure on finance organizations to think about their technology. And I think it pushed a lot of organizations that hadn't made the investment in upgrading their accounting systems. Potentially they were sitting on the fence and it pushed them off, and so they invested in that technology. So that accelerated it. And I think that now what used to be a little pressure on the finance department to be more strategic is now not just being more strategic, but actually adding tremendous value. And to do that, I think that people are going to have to continue to make those investments. So it should accelerate, because as the technology evolves, it gives us the ability to actually think more strategically. The pressure will be on us to actually carve out that time for ourselves and our departments to do that for organizations.
I agree. Thanks, Raleigh. I mentioned in the last slide that over 40% of respondents have invested in technology over the past year to help with the close. These companies are more than likely to have moved to a cloud-based accounting system. And I'm going to share some stats around that in the next slide. But before I do so, I would like to highlight some of the benefits that you can expect to get from a cloud-based accounting system like Sage Intacct. This point about automation and how it speeds up the close, provides more time for value-add activities, I've already covered. So I would just like to mention that the real value comes from automating complex processes like consolidations, currency conversions, intercompany eliminations, revenue recognition, and complex billing scenarios. Most cloud-based accounting solutions provide integrations to other systems, such as a fixed asset system or payroll solution. This eliminates the need to create manual journal entries and as well eliminates the need for error-prone data entry, which is sometimes needed. And because cloud-based accounting solutions are hosted via the cloud through the internet, you can have access to your data anytime and anywhere, meaning you can access your data on the go via your mobile or perhaps laptop. And this means finance leaders and their teams can make decisions based on real-time data. The next point about built-in AI technology, I've talked about that as well. And most cloud-based accounting solutions today do provide some AI capability. And as discussed, this enables transparency sooner in your accounting system and in your GL. And the last point about the ability to scale. At some point, you will probably hit a roadblock with your current on-premise or legacy solution, as it won't have the flexibility to handle growth. But with the cloud-based accounting solution, it will allow you to scale, and it will scale with you as your company grows. This means it can easily, you will easily be able to add more entities, more users, more transactions, even add more locations. There's no limitation as far as the server size. It just scales with you as you grow. Based on comparing the data from this year to last year, more and more companies are moving to cloud accounting solutions. This year, 87% of the respondents either have a fully based cloud accounting solution or a hybrid solution. And by hybrid, I mean some part of their accounting solution was not hosted in the cloud. And last year, it was only 58% of all the respondents. So almost 30% more have moved their accounting solution or system to a combination of cloud-based and hybrid systems. And of those respondents that have not yet moved to a fully cloud-based accounting system, 50% plan on moving within the next 2 years, and another 21% plan on moving eventually. To wrap up, throughout this presentation, Raleigh and myself have shared best practices and strategies as to what companies are doing to help finance teams achieve a faster and more accurate close. And the key to all of this is adopting a combination of these 3 strategies, which really boils down to having an accounting solution that offers built-in automation and AI capabilities. So I really hope listening in today will bring you and your finance team one step closer to providing guidance, insight, and value across your organization. Well, we are almost out of time. We will have time to answer a few questions. So let's see. Raleigh, I think this question could be for you. So here's the question. Our finance team uses a combination of QuickBooks and spreadsheets with a lot of manual processes. If we move to a new accounting system that has more automation capabilities, what do you think should be the top things that we should focus on first to help us with the close?
Susan, the first thing I would go after is AP automation. That's a no-brainer. Number one, you get such a huge increase in efficiency of your organization, just from using the technology rather than walking things around and things like that. Second thing is AP automation can save you a ton of money. The average transaction cost of a single invoice is roughly $15, and it goes from $15 to $3 when you use AP automation rather than doing it manually. And then in addition to that, they say that your staff spends up to 41% of their time having conversation with vendors to just talk to them about their invoices and making sure they're correct. If you can automate that whole process, you can not only save dollars, but you can save time on your staff, freeing them up to do things that they potentially enjoy even more.
Thanks, Raleigh. I think that's really useful, and AP is certainly the best and first place to start. So I'll read the next question, and I'll take this one. So I'm not surprised about getting this question. It says, I am unclear about AI in accounting and how it can help us with accuracy and our close processes. Maybe you can provide an example. Well, I'm not sure what business you're in, but let's assume you have a professional services team or some type of project team. And by the way, I'm using this example because I was an auditor in the past and had to track every billable action for the clients. And I remember it being the most tedious, time-consuming exercise. So I'm thinking with a product like Sage Intelligent Time, what it does, it uses an AI time assistant to reconstruct the work week across multiple projects and ensures every minute of time is collected. So it maximizes employee utilization, increases billable time, and most importantly, produces the most accurate invoicing. And because it helps to drive timesheet accuracy, it saves the finance team's time on time entry reviews, tracking down errors, and thus it gives the finance team more time to review metrics, prepare invoices, and close the books. So I hope that answers the question, and that gives you a good idea of what AI is all about. Thank you to Raleigh for joining me today, and a big thanks to everyone for attending today's webcast. If you're interested in seeing the full results of our survey, or you want to stay in touch with Sage to find out about future webcasts, please feel free to reach out to me, and I will make sure marketing sends to you the published results when it's available within the next few weeks, and or have marketing add you to our invite email list. Thank you, and have a great rest of your day.